Wait, stop scrolling. I know exactly what you're thinking. Penny stocks are a scam. Pump and dump. 99% of the time, you are absolutely right. But this is the 1%, buried under $2 a share, ignored by almost everyone on Wall Street. There is a technology company with over 500 patents, zero toxic debt, and a product that could become the eyes of every self-driving car, every autonomous drone, and every industrial robot on the planet. The company is MicroVision, ticker MVIS, and in this video I'm going to show you why institutions are quietly buying this stock and why you might want to pay attention before the crowd finds out. Stay till the end because I'll also give you the one risk that could break this entire thesis. MicroVision makes LiDAR. It's a laser-based sensor that lets machines see the world in 3D. Think of it as the eyes of an autonomous vehicle. Without LiDAR, a self-driving car is completely blind. The global LiDAR market is projected to grow from $1.5 billion today to over $20 billion by the end of this decade. That's a 13-time increase, and MicroVision has positioned itself right in the middle of this explosion. Rewind to 2023. They acquired Dibio's automotive LiDAR software, gaining access to decades of German engineering. Then came two partnerships with major global automotive OEMs. We don't know their names, but we know the deals are real and the milestones are being met. Now fast forward to 2026. This year alone, MicroVision has pulled off major moves that completely changed the story. First, they acquired key assets from Luminar Technologies for $33 million that gave them two new long-range sensors called Iris and Halo, and an ultra-long-range sensor called FMU. These are 1,550 nanometer LiDARs, widely considered the gold standard for high-performance autonomous driving. This acquisition instantly expanded their product portfolio from short-range to ultra-long-range overnight. Second, they partnered with Avula, a drone company, to integrate their LiDAR into autonomous drone systems. We're talking GPS-denied environments, three-dimensional terrain mapping, collision avoidance, safe landing in unknown locations. This is not science fiction. This is happening right now. Third, they launched MVIS, a short-range, energy-efficient LiDAR designed for robotics, warehouse automation, and drones. Just last week, they demonstrated something called a Tri-Lidar system, combining one Halo sensor with three MVIS sensors to give a vehicle or robot 360-degree vision. That demonstration worked in real time. And fourth, they just reported first quarter earnings. Revenue came in at $900,000, up 50% from last year. Yes, that number is small, but here's what matters. Management maintained their full-year revenue guidance of $10 to $15 million, raised gross margin guidance to 35 to 40%, and lowered their expected cash burn for the year from up to $70 million down to around $60 million. Now let me give you the number that institutions are watching. MicroVision ended the first quarter with $46.1 million in cash. At the current burn rate, they have roughly 2 to 3 quarters of runway. That's tight, that's the risk. But management has already taken steps to address it. They recently filed for a $38.6 million shelf offering and exchanged existing debt for convertible notes due in 2028. They are managing the cash carefully. Now here's where it gets interesting. Despite the small revenue, despite the cash burn, institutions currently own approximately 31% of the company. Yes, you heard that right. Vanguard is the largest institutional shareholder with nearly 8%. Charles Schwab, Northern Trust, Geode Capital, Morgan Stanley, they all hold positions. And Wall Street analysts? At least 3 firms cover the stock with a consensus price target in the range of $2.50 to $3 per share, representing roughly 300% upside from current levels. One firm recently initiated coverage with a price target of $3.06. That's nearly 4 times the current price. But let me be brutally honest with you. This is not a safe stock. This is not a dividend stock. This is a high-risk, high-reward speculative bet on the future of autonomy. The bear case is real and you need to hear it. First, automotive development cycles take forever. Even if the OEM partnerships succeed, meaningful production revenue might not arrive until 2028 or 2029. Can you wait 3 years? Most people can't. Second, competition is fierce. Luminar, Innoviz, Hesai all have deeper pockets and existing customer relationships. MicroVision is the smaller player in a very crowded room. Third, cash burn. At $60 million per year and only $46 million in the bank, they will need to raise more capital or generate significant revenue. Within the next 9 months, if they raise through equity dilution, the stock price could get crushed in the short term. These are real risks. Do not invest money you cannot afford to lose. But here's why the opportunity might be worth the risk, because the market has already priced in the worst-case scenario. The stock trades at just 0.7 times sales. That's absurdly cheap for a technology company with over 500 patents and a product Portfolio covering short-range, long-range, and ultra-long-range LiDAR. Every time MicroVision announces a milestone, the stock has historically jumped. Second OEM deal, 80 cents to 140, MVIS launch. Another pop Tri-Lidar demonstration. The stock moved 9% in one day. These are not random pumps. These are reactions to real progress from a real company. And here's the final piece that nobody is talking about: security and defense. MicroVision is already shipping sensors to security and defense customers. In Q1, 75% of their revenue came from sensors acquired through the Luminar deal. That means they are not waiting for automotive. They are generating revenue right now from defense and industrial applications. That revenue is small today, but it proves the technology works and there is real demand. Before you go, a quick and serious disclaimer. Nothing in this video is financial advice. I am not your financial advisor. Penny stocks are extremely risky and you can lose your entire investment. This is my opinion based on public data and my own research. Do your own homework. Consult a professional. I am just a person on the internet. If you made it to the end, you now understand why institutions are quietly accumulating MicroVision. Real technology, massive addressable market, a beaten down price, and a management team that is executing through acquisitions, partnerships, and product launches. Smash the like button if you're willing to hold for 3 to 5 years. Comment the word LiDAR if you believe self-driving cars and autonomous drones are inevitable, and subscribe right now. Hit the bell, because my next video is about another hidden stock that institutions are quietly buying before the crowd finds out. I'll see you in the next one.